Hello traders and welcome in a new daily market analysis video brought to you by the market research team at Pure Prime. Today is the 9th of May, the beginning of a new trading week. We need to have a look on the markets, what do we have on our economic agenda, and how to trade using our technical analysis tools. All of this will be discussed in today's video. Please stay tuned. Welcome back everyone, and starting with the economic agenda for today, Monday the 9th of May, basically we had some important data from the Chinese economy, which is regarding the exports, imports, as well as the trade balance. This was basically by the beginning of the Asian session, which was somehow light with lighter than usual volatility due to the National Day in Hong Kong. So basically the volatility by the beginning of the week was still weak. However, right now by the beginning of the European session, we're having some movements that are expected to happen going through the day. Basically, we don't have much data to be looking for, so the economic agenda by the beginning of the day is basically empty from any important economic releases or data that we will be looking for. So we need to focus on the technical analysis and the charts. Let's have a quick look. What do we expect on the charts and the technical analysis real quick? Starting with the US dollar index, basically we are still having this upward movement on the dollar index supported by a hawkish Federal Reserve. We did have a 50 points rate hike, which was basically somehow expected. However, the tone from the Federal Reserve Chairman Jerome Powell was much more hawkish than expected, and we're still having this upward movement. Technically, basically, the dollar index is currently trading in an upward move, a very strong upward trend. However, we are still struggling around the areas of resistance that we mentioned during the past and the previous week, which is around 103.30 roughly. Currently, as per the momentum on the 4-hour time frame and the 30 minutes time frame, we are having this a broadening formation pattern as well as a bearish divergence to the downside. So on the long term and the medium term, of course, we are still bullish on the dollar index. However, during the day, we might have a retracement back to the levels of the previous low, 103.20. If this happened, basically, this should be a good opportunity to go long and to add to our long position on the US dollar index. Going forward with the euro versus the US dollar, we broke below the important support zone of 1.0670. Roughly, we're having this sideways consolidation just below the support, the broken support. We had this brilliant retest. However, we are still moving in the sideways range. The technical view on the euro is basically still bearish. However, we will need a break below the 1.0470, which is basically the last low created on the 28th of April. So whenever we have a BCR or a break close and a retest below the 1.0470, it should be also a good opportunity to short the euro versus the US dollar on the short term. Having a look on the euro versus the pound, basically, we are currently trading around a very key resistance level on the daily time frame, which is the 0.8595 roughly. And with a little bit of a tweak, we can basically mention that this is the 0.86 level. So it is basically a very important and a key psychological resistance. We had this which was around a retest around those levels, or we could consider this as a retest. However, we are having this bearish momentum and the bearish price action here supported by a lighter than usual bullish momentum on the 4-hour time frame. So yes, on the euro pound we are still bullish also on the long and the medium term. However, on the short time frame and during the day, any break below the 0.8527 should basically form a new lower low and should be basically a good opportunity to short on the very short time frame. The price action here was basically higher highs and higher lows. However, we just formed by the beginning of the European session a lower high, so we will be waiting for a lower low below the 0.8527 to short on the very short time frame. Going through on the gold trading, we are still basically trading below the key support of $1,900 per ounce. As long as we're trading below this key level, we'll basically be shorting the gold trading on the short time frame. However, it would be preferable for me to wait for a lower low below the 1850 in order to add for our short position. So that was all for today's daily market analysis video. Thank you so much for watching. Please stay tuned for another daily market analysis video, and please stay safe.